I'm happy to give you a small briefing of the Annual Economic Review 2023 that gives a highlight of state of the economy, the conditions of the financial system, the policies taken by the central bank and its review, and a small outlook of the economic outlook for 2024. Let me start with a small introduction. 2023 has been a milestone for the Central Bank of Sri Lanka, with the Central Bank of Sri Lanka Act being enacted in September 2023, which gives independence as well as public accountability for Central Bank in its policy making. And as a part of the mandate under this Act, the Central Bank is expected to publish a report within a period of 4 months after the completion of a financial year, a report that contains the state of the economy during the financial year, emphasizing its policy objectives and conditions of financial system. In this manner, the Annual Economic Review 2023 has been published in April 2023. And in addition to this Annual Economic Review, we also have published a report with financial statements of the Central Bank as well as a summary of key operations of the Central Bank, which is also available in our website as well as a publication. If I brief through the key contents of this report, as in any other annual reports, we are starting with key indicators of economic indicators as well as social indicators. And a brief summary of the report is given by the executive summary. And we have summarized the key contents of this report into 3 chapters. The first chapter is about macroeconomic developments, conditions of the financial system. And in the second chapter, we review the key policies of the Central Bank of Sri Lanka, and a brief outlook, macroeconomic outlook for year 2024 is given in the third chapter. So in addition to that, we have given a brief summary in a table form of key policies taken by the Central Bank or the policies related to the Central Bank, and also on topical matters of interest to the public as well as the matters that are linked to the Central Bank operations. We also have short box articles, 7 box articles. And we also have some statistical appendix tables and a special appendix table. In addition to the usual reports, this time we have a special effort to give easily downloadable and easy to use data in Excel form in all 3 languages, which is available on our website. And we have around 142 appendix tables and 11 special appendix tables with long data series, and which is easily downloadable and to be used for policy analysis as well as for research purposes. Let me give a brief summary of the first 2 chapters of the report. Decisive policy adjustments and structural reforms implemented by the government and the Central Bank during 2022 and 2023 have helped to restore macroeconomic stability to a greater extent in 2023. This has been reflected in many fronts in key macroeconomic indicators. Let me highlight a few of those. The first one is the inflation, which was the biggest problem in 2022, has been brought down to the single-digit levels by the end of 2023, and now it is being steered towards the targeted level. And also there has been a notable stability on the exchange rate, and also the external buffers are being gradually built, and gross official reserves is increasing at a rapid speed. And also the financial system, amidst several risks and challenges, the stability of the financial system was maintained. And on the fiscal sector also, which is usually, which has been creating a lot of other macroeconomic issues in the past, has also been performing remarkably well in 2023. As a reflection of these stability, we could see that economy commenced a gradual growth path as shown by growth revival by the latter part of 2023. And I will be briefly explaining these points in an expanded manner. So inflation, which reached the historically highest level by September 2022, recorded a rapid disinflation since then, and the inflation has reached lower single digits by end of 2023, and currently, which is staying around 1.5%. There were several factors contributed to this, mainly the tighter monetary policy stance adopted by the central bank, along with tighter fiscal policies adopted by the government. On the policy front, the measures helped with this disinflation path. So in addition to that, there were improvement in supply conditions with the normalization of global domestic supply conditions and moderation in global commodities prices, especially the energy related prices, and also strengthening of rupee also has helped this disinflation process. And following the enactment of Central Bank Act, Central Bank is trying to maintain inflation at the targeted level of 5% going forward. Following the restoration of price stability, the monetary policy stance was gradually transitioned towards an accommodative policy stance since mid of last year. So during 2023, the policy interest rates, which determines the overall market interest rates, have been brought down by 6.5 percentage points. And in addition to that, in March 2024 also, we have reduced the policy interest rate by 0.5 percentage point. So this was possible with the notable moderation in inflation and well-anchored inflation expectations, and subpar economic activities amidst subdued demand conditions, and also the easing external sector pressures also helped us to adopt an accommodative monetary policy stance. Reflecting this easing monetary policy stance, as well as administrative measures taken by the central bank to reduce the selected lending interest rates, and also reduction in risk premia that is attached to the government securities market yields following the domestic debt optimization program, has helped the overall market interest rate structure to adjust downwards. There were several benchmark interest rates have shown in this chart. For example, if you look at the 91-day Treasury bill rate, which was at 32.6% by end 2022, and that has come down to 14.5% by end 2023, and further to 10.1% by March, and which is lower than 10% at present. And reflecting these developments, recovery was underpinned in the economic activities. The economy has recorded favorable growth in the last two quarters of 2023 after recording a contraction for 6 consecutive quarters. The recovery was underpinned by the renewed macroeconomic stability amidst softening interest rates as well as easing external sector pressures. On the external sector also, we observed several notable improvements, especially the external current account has recorded a surplus in 2023, which is the notable development, which is the current account surplus recorded in 2023 has been the second time since 1977. And also the gross official reserves also has more than doubled compared to the end of 2022, so which increased from $1.9 billion by end 2022 to $4.4 billion by end 2023. The reserve build-up continued thus far during 2024 as well, and by end of April, the GOR has been built to $5.4 billion level. So with this improvement in stability in external sector, the central bank and the government was able to gradually relax several restrictions imposed during the crisis as well as during the COVID pandemic time. So several exchange rate restrictions, capital flow management measures and import controls were gradually started being relaxed in 2023. And the exchange rate, the Sri Lankan rupee appreciated notably after recording 44% depreciation in 2022. The currency has recorded an appreciation of 12.1% in 2023, and that appreciation continues thus far during 2024 as well. As per the new act of the central bank is implementing flexible inflation targeting regime with the support of flexible exchange rate regime. So starting from September 2023, the central bank is following a flexible market-based exchange rate regime, and that will be followed in the upcoming period as well. And this also has helped the removal of several restrictions imposed on exchange rate transactions. On the financial sector, the total financial sector assets of the country stood at 33.2 trillion level by end of 2023, and 62% of this asset has been reflected in the banking sector, followed by 12% in EPF and 5% in the licensed finance company sector. Of the banking sector, we could see that there were some improvements in terms of statutory liquidity ratio as well as the capital adequacy ratio and also the profitability ratio. However, the stage 3 loan ratios as a percentage of total loan increased to 12.8% by end of 2023. And also we could see some reduction in loan and advances as well as deposit. The similar trend was observed in the financial company sector as well. During this year, there were several financial sector policies were taken by the central bank, and according to the new act, the central bank has been designated as the macroprudential authority as well as the resolution authority for licensed finance institutions. And several microprudential as well as macroprudential policies were taken during this year. And also the measures were taken to implement new measures like regulations on financial consumer protections for financial services providers also was introduced in 2023. And there has been a notable improvement in fiscal performance in 2023, which is reflected in key fiscal balances. Government revenue has improved from 8.2% of GDP to 11% by 2023, which was supported by several tax policy measures taken by the government. On the expenditure side, even though several measures were taken to rationalize the expenditure, due to the increased interest expenditure or domestic interest expenditure, the total expenditure also has increased in 2023. However, showing the improvement in revenue as well as the rationalization in other expenditures than the interest expenditure, the primary balance of the fiscal balance has improved in 2023, recording a 0.6% of GDP surplus in the primary account. This is the sixth time the country has recorded a surplus in the primary balance since 1950. And the central government as a percentage of GDP has declined from 114.2% in 2022 to 103.9% in 2023, which was mainly supported by nominal growth in GDP as well as the appreciation of the currency, which was helping the converted rupee terms of foreign currency. However, the debt servicing as a percentage of GDP has increased in 2023. Let me give you a brief overview of the outlook of 2024. Let me start with the inflation outlook. So even though we could expect some intermittent fluctuation in inflation in the recent time due to supply side measures, we expect that inflation will stabilize around the targeted level of 5% over the medium term, supported by appropriate policy measures. However, there are several upside as well as downside risks to this projection. On the upside, we see mainly the global developments, mainly the energy price-related developments, and possible adverse weather conditions affecting the food supply and energy generation. And also, possible upward revision to electricity prices could be putting upside pressure on the inflation. On the downside, faster recovery of supply conditions and also continued limited purchasing power of the public also could be limiting the inflation movements. In line with the headline inflation, we also expect that core inflation will also be stabilized around 5% over the medium term. If I talk about the other key indicators and their outlook for 2024, we expect GDP to record around 3% growth, real GDP to record around 3% growth in 2024. However, on the external trade balance, we expect that both exports and imports will expand. However, imports will expand at a faster rate than exports, so that we are expecting deterioration of trade balance to 7.8%. However, with the support of revival in services sector exports, including tourism and improved workers' remittances, we expect a surplus will be maintained in 2024 as well, but at a lower rate of 0.5% of GDP. And we expect continued build-up of official reserves. As month of imports, we expect the month of imports adequacy of gross official reserves will be 3.4 months. And we expect the overall budget deficit to record 7.3% and annual average inflation to be maintained at the targeted level of 5%. With this report, we would like to highlight some key messages to the public as well as other stakeholders. The messages are like the formidable recovery of Sri Lankan economy hinges on the continuity of reforms, which includes successful continuation of the IMF-EFF arrangement as well as the completion of debt restructuring process. Since the country has not fully exited the crisis, there is no space available for any slippages from the committed path, including costly policy experiments. Building strong institutional setup and a legal framework will support the economic transitions towards new normal, while broader political and social consensus on economic reforms is critical to permanently resolve structural imbalances and avoid recurring policy reversals and economic downturns. So in this way, the central bank is committed to maintain domestic price stability, external sector stability, and financial system stability, thereby supporting sustainable economic stability and sustainable economic growth. Thank you.